I'm so bullish about this generation. For the economy writ large, a lot of the bigger firms aren't recognizing the urgency in which they need to get young people into these organizations. There's a lot of talented people that we can talk to that maybe we wouldn't have been able to talk to 5 or 6 years ago.
My guest this week trades the power grid for a living. I'm joined today by Cory Paddock, the founder and CEO of the energy trading firm GBE.
Power is very different. Power is very much this intersection of economics and physics. I think the best way I've heard it described is it's like the perfect amount of darkness and the perfect amount of domain knowledge that you have to accumulate over weeks and months and years. Do we look at prices? Absolutely, but there's a shit ton of other info that we're looking at on a 5-minute basis. You can't just set aside some monthly target. Oh, I got to make this much every month. It's very chunky and volatile. It's a market where somewhere between 5 and 10 trades make up the majority of your year.
Everyone thinks about equities. Everyone has a Robinhood account. Everyone's trying to think of Tesla, Nvidia, what are those stocks going to do? So it's much harder to have edge there. What has been the number one source of edge in identifying highly profitable trading opportunities?
I would say...
Cory, thanks so much for doing this. You started your own energy trading firm. What was that like?
We're gonna ease right into this, hey? Like, easy question to start off with. My business partner, the other co-founder of GBE, Jerry Zhang, we had enough money to do so, and the expected value was positive. So why not do it? I think it was like kind of that simple.
Wonderful, wonderful. I guess, I was doing research on the energy trading business before this call. You sent me that playlist of videos on YouTube, so I could prepare and learn a little bit about it. But I guess I want, from you, someone who's been in this space for quite some time, can you give me an overview of how energy trading, and I guess more specifically, power trading the grid works?
How much time do you have? Well, I think it probably makes sense to kind of define this space, maybe kind of as I see it, and then how it's carved out versus kind of the other pieces of commodity trading. I think of energy trading as basically like grouping together power trading and gas trading. I think oil is its own separate thing. Oil probably considers themselves their own separate thing. Same thing with refined products. But yeah, grouping gas and power together into this kind of energy trading bucket, I think makes sense conceptually. And well, from there, I think it makes sense for this conversation very much to be more towards the power trading side, which is very much my area of expertise. Power trading itself is a relatively new construct, really only going back to the very tail end of the 90s, early 2000s, and very much part of that same kind of deregulation initiative that brought deregulation to gas as well. But power is very different in so many different ways, and we can talk more about this because power is very much this intersection of economics and physics, and a bit of an artificial construct in order to actually figure out the best way to set up a market within those two constraints. And I would say it's still a work in progress. I don't think there is the perfect market design. But that being said, I'm a markets person. I believe in markets, believe in the efficiencies that they can bring over time. And a well-designed power market, I think it provides all kinds of benefits all the way down to the consumer level.
It sounds like there's so many different intricacies to the way these markets can be understood, not even just trade. I mean, forget being traded, but understood. I'm even curious about, do you have to go and visit the sites in person to maybe get a better picture? But I guess the one thing I'm curious about, surrounding all of this, is given that there's so much to understand, so many intricacies, what does the research pipeline look like at GBA to capture all this? Because I imagine, on one end, there's the time series for the day ahead. And obviously you need to go there and see, okay, where is the opportunity going to be? But also, like nuclear is different to coal, which is different to, all these different, to solar, to wind. And so how do you model all these different aspects? It sounds like a handful. I'd love to hear it.
Yeah, it's I think the best way I've heard it described is it's like the perfect amount of darkness. um and the perfect amount of like domain knowledge that you have to accumulate over weeks and months and years. Um it's awesome that it's not really taught in school. Um although that's changing a little bit. There's a handful of programs that actually now have programs that kind of go through a little bit of the mechanics of how these markets are constructed. Which 20 years ago it was very much like um an uh, an academic initiative even to kind of understand it. But now we've got lots of years of data behind us. We know how these markets behave, so there is a little bit more that you can do, I guess, like on the education side. Um, but yeah, there's a lot of info that's out there in public, but it's in the darkness. Each of the markets, have thousands upon thousands of pages of market rules and uh, stakeholder meetings and minutes and all kinds of there's a ton out there. At times it's difficult to figure out what's signal in the noise, but that's great. If you're an incumbent and you've kind of figured it out. LLMs are helpful, for sure, but they're also like excellent at hallucinating. Like very, very good, to the point where you can tie an LLM up in knots, and basically get it to agree with your position on a market rule. So that's also fun. But they've also been a really useful tool for us as we train and develop a new generation of traders. Because the way that you can create training modules, and basically explore and unearth information is I mean, it's never been a better time for sure. But that being said, you still very much need like a practitioner, and a domain expert to kind of guide the process and be able to correct and like course correct and be like, oh no, that's actually not the way it is. Like, no, it's more like this. Yeah, so that would be where like kind of the years of experience come together. But like how does a trader consume all this information? I mean, you would have seen lots of like trader setups and desktop setups. And typically, like whenever you see kind of like that stereotypical setup, you're usually just looking at like a lot of prices. It seems like there's like especially like on the equity side, maybe even on the gas side of it, like people are looking at charts. They're looking at a lot of prices. Do we look at prices? Absolutely, but there's a shit ton of other info that we're looking at, like on a 5-minute basis, and have been doing so for years. And like tick by tick, grid level data on the generation side, on the power flow side, on the pricing side across all these different nodes. And so, yeah, just the accumulation of that muscle memory is quite difficult to replicate, I would say. But the young people that we're working with, I guess the advantage that they have coming into it is we already know what to look at, or at least our view of what to look at, within this huge domain of knowledge, and be able to at least kind of provide some focus on how to build a story about why something's happening, and why a price is happening in the moment and what's driving it.
You were telling me in our pre-call that there's great information out there, but you really have to dig for it. And I imagine that's amazing for you guys. Everyone thinks about equities. Everyone has a Robinhood account. Everyone's trying to think about Tesla, Nvidia. What are those stocks going to do? Everyone analyzes the supply chain of Nvidia, who their customers are. And so it's much harder to have edge there. But what you've mentioned to me is that because there's the information is not as public to everyone, you guys have a lot more edge. And I have a question about your edge at GBE. What has been the number one source of edge in identifying highly profitable trading opportunities for you guys?
I would say um, largely having a point of view on a paradigm shift before the paradigm shift actually starts to happen in real time. Uh, and and there's a number of these paradigm shifts that have happened up until the present moment, and there's going to continue to be. Um, so um, Jerry Zhang and I, my business partner, and we sat together and traded together for years. Traded the same product, 4 sets of eyes on kind of all the same data, which is something we believe internally is quite important. Not only just to be able to not miss things, but actually have a conversation and talk through what an individual is seeing. But at any rate, we had a point of view around what was going to happen. Yeah, essentially the fundamentals around where we thought power was going to flow, where power was, where it was needed, where there was a surplus, where there was a deficiency. And so I would say we had a point of view before the rest of the market kind of had figured it out. So the rest of the market was kind of still trading with a previous paradigm in mind, but the paradigm had shifted. And power is pretty I mean, all commodities are this way, and that like the supply and demand are constantly changing, and what those attributes are. But I would say power it's amplified because there's no such thing as a like day. Well, as a perfect like day. There's all these days that rhyme with previous days, but if you wanted to go and do some historical analysis in power and look at like the past 10 years of data and come up with some trading insight from like 8 years ago, amazing. We're happy to take the other side and not trade. Like, it's so recency biased based because the topology of the grid is changing so dramatically, and all the factors that come about into price formation change so dramatically over time. I mean, even the larger shifts that we've seen through our career would be, when I first started, there was it was like gas was still $10. Right. So gas was still $10 and coal generation was everywhere. And so at first, there's this huge transition from coal to gas. And with that was a lot of interesting downstream effects that I don't think the market was like quite predicting, because really all the lines in the first place were set up, and all the power flows were set up to deliver coal-fired electricity to load centers. And then all of a sudden, if you're locating gas in different places, then all those existing lines, the power flows go in kind of different ways. It's as if you I don't know, you relocated a city center to like a suburb, but kept all the same roads. But then all the traffic patterns in some ways like reversed, and like cars are going in different directions at different times of day. So that was a big paradigm shift. Another big paradigm shift was the introduction of wind. And at first, we would see a lot of negative prices. That has largely gone away. Again, like the system operators didn't quite know how to handle it and incorporate it into their optimization. More recently, we've seen solar get introduced into the mix, which again is offering up some interesting opportunities, I will say. And that's just kind of on the supply side. And then I guess the most interesting thing that's happening today is, throughout my career, we've seen these changes happening on the supply side, but on the demand side, everything's been relatively flat, if not down, just based on not only deindustrialization and offshoring, but also just energy efficiency. It's just like that's the arc of humanity, is we're always going to figure out how to use energy more efficiently. And so just demand has been like flat towards the down in all these regions. aside from big weather events, which is its own whole separate conversation, which makes, power and power returns so uncorrelated to what's happening in equities. It just very much depends on what God decides for winter or summer. But yeah, for the first time in my career, we're seeing demand go up. And so largely attributed to data centers, but also some of the industrialization, also some EVs, although that story isn't happening as fast as a lot of like EV bulls I'd kind of predicted. But that still is going to happen if you're perched on self-driving and what we'll talk taxis, and that's kind of foolhardy. We can have a conversation about when it's going to happen and when the penetration happens, but it's going to happen. And then same thing with with heat pumps. Heat pumps is another one that is converting a lot of the home heating from gas and oil over to electricity. That is happening gradually, probably not as fast as people thought. So we're seeing demand go up, and so demand volatility is going up, and then supply volatility is also going up with more penetration of wind and solar. So it's a really interesting time, and again, like I would argue, like another paradigm shift that we're entering in. And so I would say that I guess our edge is like just staying hungry and trying to understand the paradigm shifts as quickly as possible, or having a point of view before they happen, so we're not largely surprised by them, or if we are, to be able to quickly ascertain what's happening, what's driving the price, and then be able to pivot quite quickly.
So it's about staying hungry, staying ahead of the curve. In our pre-call, you talked to me and you told me that you spend a lot less of your time now actually trading and a lot more managing and actually recruiting. So it's funny. So to our listeners, and I don't know who exactly it was, but so a listener of Odds on Open was interning for GBE and sent one of our podcasts to Cory, and whoever that is, thank you very much. I'm really enjoying this conversation. But, Cory, I want to hear about what that's like, what it's like doing what you're doing now, recruiting, trying to find the best talent, running the business. How do you identify when someone's going to be an excellent energy trader?
I have no idea. No. There's definitely some clues. And yeah, I think it's a very interesting time to be doing this. There's obviously like this paradigm shift that's happening within the physical grid itself. But I also think we're going through a bit of an interesting transition in just like how work is being done. Obviously your audience is not going to be like unaware of this, but when I first started my career, I could use Excel and could wow my superiors with just my mastery of Excel. And so we're entering in an analogous period now, right? So now I'm the old guy. Okay, sure, I use LLMs, but I'm not vibe coding. I'm not like living in Python. I'm not building my own models with the same speed and being able to turn around models and all kinds of forecasts and tools that this generation is able to do. And I would say even like there's like a split in the generation between kind of like the 20 to 25s and even like the 28s to 32s, where the 28s to 32s haven't really lived with LLMs in the same way that the 20 to 23s have. And they would have adopted it immediately, used it for every aspect of school, figured out how to push the limits of how institutions were evaluating, and slow to pivot. But this is like a very I'm so bullish about this generation, and it's shitty that well, it's good for us. It's shitty that for the economy writ large that a lot of the bigger firms in all kinds of different domains aren't recognizing this, and the urgency in which they need to get young people into these organizations to basically like to FAFO their processes and kind of get in line. But from our perspective, it's great because it means there's a lot of talented people that that we can talk to that maybe we wouldn't have been able to talk to 5 or 6 years ago. And then largely whenever we talk to them about the domain and give them enough background and give them a sense of how volatile it is and all the opportunities that are sitting there, they get super excited. It's definitely one of those scenarios where you've got a lot of people that are a lot of young people are very interested in trading, have been trading for quite a while, even by their early 20s, just based on how discoverable everything is. I mean, this is another thing, right? Like I didn't grow up with YouTube. I grew up with freaking like, what was it? Like Microsoft Encarta or whatever, like the first online encyclopedia was, which was like kind of amazing at the time. But the availability of good information is like, it's never been better. And this is going to be the worst time it's ever been, right? It's like, it's on this progress curve. So young people are already like trading, they're building their own models, they're going and doing all this self-learning. They're trading crypto, they're online gambling, they're getting kicked out of sports books, they're getting kicked out of online gambling platforms because they're too good. Because of just how discoverable things are and just the passion that they have for the space. So then none of them really know about power until, we go and have that conversation and they kind of light up. It's like, holy shit, I didn't know this domain even existed. This is like, and you've got all these old guys like Cory sitting there still able to like collect trends. Like, how ridiculous is this? Yeah.
For sure. You said a lot of stuff that I fully agree with. I feel like nowadays you have outliers in a way where you've never had them before. You have, if you take a guy and he has, let's say he's like 90th percentile IQ in agency, or even just 50th percentile IQ, but 99th agency, and he has all this information in the world, he can really go places. And I see it on Twitter all the time, on X all the time. There was this guy and he was running this anonymous quant trading account, right? And he would tweet about things, and I would find his tweets unbelievably insightful. And I saw he was based in London, and I messaged him, and I won't say the account just to keep this guy on the low. And I was
like ninth grade or what?
No, he wasn't. He was my age, but I couldn't believe the level of intellectual maturity he had, and not just in the quantitative trading domain, but in all aspects. Just I think there's often this stereotype that people who do quanty things are, they can only do math and that's all. They don't have they can't think deeply about ideas or philosophy in the way that, let's say, an English major would or a philosophy major would. But this guy was like in every sense I was blown out of the water. And I think that the conditions that we've created in the world, that the system has created, are ones in which outliers perform. Now, I want to hear a little bit about that, outliers, at GBE. How do you structure the firm in a way where you will truly allow your talent that you're recruiting and clearly working well? How do you create conditions to where those people can thrive and perform exceptionally at the firm?
Yeah, that's a good question. I think ultimately, it's actually kind of an interesting like culture question too, because largely there's all kinds of differentiation in these industries, in the financial industry, that's largely due, typically going back to the culture of the founders in the first place and how they wanted to structure the firm, their personalities, and then over the years that gradually precipitates itself as the firm continues to grow. And so in a lot of ways, I can attribute our philosophy and our culture just back to how Jerry and I think and how we want to work and who we want to work with. Um, I think we're in a privileged position in that we don't need to work now. We want to work. It's still fun. It's still very satisfying and offers up a lot of fulfillment. But we want to work with people, and I would say I've kind of like earned that right to work with people that we want to work with. And based on just our open-ended curiosity, um, I think it's just it makes it very easy for us to allow that curiosity to manifest with the young people that we are working with. So um, we are currently not very prescriptive about how strategies come about or how ideas come about, from the young members of the team. We do think it's very important to provide a platform of understanding of the fundamentals in the grid, um, because there's nothing more frustrating than losing money and then not knowing why and then not being able to figure out why. And so on that front, I think we're extremely well positioned to be able to explain something after the fact. And then the way I would kind of think about it is like we could generally nudge people back into the right direction. Meaning like we're going to offer up a lot of flexibility in pursuing an idea, pursuing a strategy. But if it's a little bit off the rails or we think it's going to be a dead end, then we can kind of nudge it back towards a direction where we think it's got more potential. So yeah, again, like being smaller, our infrastructure is set up in a way to allow a lot of agency, to allow a lot of individual exploration and experimentation. And I mean, for me, it's extremely rewarding to be a part of because I'm learning a lot along the way, and I'm getting a sense of how these young people are thinking, and that's how I want to live. So that's kind of how it's getting manifested in the culture and the day-to-day work.
At GBE, do you trade just you and your business partner's money?
Yeah.
What has been the major difference in moving from having worked at a commodities trading firm, making money there, to starting your own energy trading firm and taking on all the risk with your money? It's not like it's just gains that you get. Um, how has that shaped, how has that skin in the game shaped how you think about risk?
Mm. Um, I mean, I could go and deny that it was a bit jarring at the beginning, but it was a bit jarring at the beginning. Um, you've got all this skin in the game. I think the one thing that we did that in hindsight was very much the correct thing to do, which was a very conscious strategy, which was to make sure that we didn't cut a single corner in ensuring that our screens looked the same, meaning we were ingesting all the same information that we were used to in the same way, in the same shapes, in the same sizes, so that it wasn't just a transition to trading your own capital, um, and then also having to like retrain how you were looking at the market. And I used to look at there, but it's no longer there. Oh, why don't we have that? Oh no, we're not subscribing to that vendor. Like no, like that was, we were very conscious about making sure that everything was the same, if not maybe a little bit better, based on how we wanted to look at information. So on that transition, it was very smooth. And I think that was a really vital thing to do. I'm not sure how many others go through that conscious decision or not, but for us, that was vital. And then any other trader that has come to work with us, we've been very intentional about making sure that it's the exact same thing, so that when you have more skin in the game, um, it's just more skin in the game. You're not also dealing with the stress of, am I working from less information or imperfect information to make my decisions. Um, the first couple weeks, the first couple months, yeah, it's jarring, right? You're used to looking at a number on the screen, in real time, going up and down, and we didn't talk much about this, but the product that I trade is that I traded historically is PJM West Hub. Um, and actually, it's probably a good moment to like pause and describe what that product is. But we were talking about a bunch of individual nodes before, but PJM West Hub is actually a weighted average of several of those nodes, and so it covers a bit bigger geographic area. So it has several nodes in around the Washington D.C. area, and then several nodes in Western Pennsylvania. I have not seen any good documentation around what the thinking was around why that's the case, because it doesn't make too much sense from like a geographical perspective, but it roughly captures the fundamentals of PGM at a given moment in time. So trading this balance a day product, so largely like what's happening today and tomorrow, and kind of like balance of week, a little bit next week, but yeah, very much in the moment, trying to understand what the fundamentals are in coming up with trading strategies and decisions, and so you're subject to a lot of volatility. So you're seeing, so that contract itself is not only it's the weighted average of all those nodes, but it's actually a weighted average of all the 5-minute prices within hourning 8 to 23 of that particular day. So it's a pretty interesting contract in that you're throughout the day, there's less uncertainty that's getting priced in, because you've actually got part of the contract that's like quasi settled, and then part of the contract that's still open. And a lot of part of that contract that's still open is during, a big supply demand uncertainty for the rest of the day, based on just where that intersection lies. So the P&L swings can be like quite significant, not only within, half a day, but we're talking like 5 minutes. A position can go like instantly for you or against you within a 5-minute period, and gets priced immediately. And then right away you're looking on screen and seeing an unrealized or unrealized gain or loss, like immediately staring in front of you. And so that was a jarring thing, when before it was a number. Of course, it was a number that we knew was like tied to our bonus, but it wasn't like as direct and visceral. And when we first started trading our own money in 2014, it was a big volatile winter. There was a lot going on that winter. There was big price movements, and so like we were seeing some pretty big swings, lots of opportunities. And I think we're like quite fortunate to make it through that period with good success, and it really set us up for future success within the company. But yeah, I don't know exactly when the moment was when it started to become a number, again, as opposed to, holy shit, this is like money from my bank account, conceptually. But I think it was one of those things where it like happened gradually, and then suddenly, and then all of a sudden it's just back to being a number, and then you're just trying to trade well. And that's kind of always been our philosophy, is just try to trade well. It's a market where it's probably like somewhere between 5 and 10 trades make up, the majority of your year. And then the rest of the trades, you're very much just like trying to learn, stay up in the market, pick up dollars here and there. Definitely want to be able to accumulate P&L, but accumulate like future learning that you can apply to a big setup, and that have the capital behind you to throw at that setup. And so it's like, because it's like a lot of the price action happens depending on what's happening with the weather, that is highly unpredictable. You can't just like set aside some like some monthly target around like, oh, I got to make this much every month or something like that. It's very much like it's very chunky and volatile, so that really we've always just thought about like just trading well, and then like results come. And then sometimes like those leaner years that are actually just like you traded great, but there just wasn't opportunities there. There wasn't the setup wasn't there. And the worst thing you can do is like try to force a setup that's not there. As opposed to, yeah, just like stay clean with process, stay hungry and still learning. And then, yeah, just trying to be consistently trading well on a day-to-day basis.
For sure. Now, like I was just thinking, I mean, if I'm betting the majority of my liquid net worth, and that's all in the form of a trading firm, and you see the swings downward, I imagine psychologically that can be very difficult at times. How do you try to align the incentives for your traders to be the same? Because, I mean, the majority of trading firms, it's, you have your bonus, that's 15-20% of the money you make for the firm. But that's all gain. And so if you have no downside, obviously, assuming you can always keep your job, the optimal strategy to maximize your earnings is to go for the highest volatility, highest variance approaches, because then you have the highest chance of having a blowout year and collecting your 15-20% of that. How do you try to align those incentives for your traders so that they're all aligned with the incentives of you, your partner, and whatnot?
Oof, that's a deep question. You try to do your best not to work with assholes that that come up with some expected value calculation and be like, well, if I blow up, it was kind of worth it. I mean that's one thing, but I would say like largely the market doesn't really reward people in the long run that that go trying those strategies. Um, yeah, I mean we've done our best, I guess, to like set up a bit of a put option within everybody's incentive structure. It's imperfect, but it is what it is. I mean, yeah, one thing that we were very, very conscious of and was like a very conscious strategy was, trading's hard enough to put forward all kinds of stress capital on a day-to-day basis is just the accumulation of that mental stress is significant. Like this is not for everybody, that's for sure. And so to layer on top of that uncertainty around whether somebody's going to get paid or not, I mean that's like borderline cruelty. But like most of the industry works like that, right? Like most of the big firms, they might have a structure in place, but it's still largely discretionary. It may depend on how the company is doing as a whole, even though you might blow it out of the water one year. And so imagine like, oh, this is so hard to think back at that time, but like how psychologically painful it is to like crush it, to give like your heart and soul into your work and into the markets and just like that meat grinder. And then you have like this added uncertainty of whether you're going to get paid or not. Like, God, that's cruel. So, we were very, very intentional about stripping that piece away, in how we've tried to align incentives just so that it's hard enough to play in these markets and play against the brightest minds in the world. And then, to have to worry about whether you're going to get a check or not, that's awful. So yeah, we're very conscious about like eliminating that piece.
You're hiring a lot of people, you're screening a lot of talent, you're creating this culture at your firm that thrives on excellence. And from what you've told me, you also care very much about the people at your firm. That's really important to you. I want to end our conversation on a personal question, Cory. You've done a lot, you've accomplished a lot. You're building a great business. what drives you to do all this? Because as you said earlier, you could retire into the sunset, maybe go vacation pretty often.
Yeah.
What drives you?
Well, I think ultimately, people kind of in situations analogous to mine, not everybody, one day wake up, or maybe after a series of days wake up and say, why am I doing this anymore? And start to look for a bit more meaning, and and do some soul searching around where fulfillment is derived from in their lives. Not just in family and relationships, but in their work. And that's where I am now. So, Jerry and I, like, honestly speaking, Jerry and I didn't do a great job of finding the right people for us to pass our knowledge on to, and to carry it forward in better ways. And that's a huge motivation of this initiative. We felt it was just, not only from a financial perspective, but just like, how silly and awful that would be if our knowledge just kind of like went to the grave, as opposed to being kind of passed along, and lit, I don't know, by a torch to another generation. So that's a huge driver for me, is to be able to find our people, and provide them the platform to go and do the thing, and quite honestly, like, give them the opportunity to reach levels that we did, and all the good that comes from that, and the optionality that comes from that, from having a bit of wealth, and how that impacts your life positively.
Wonderful. I think we can all learn a little bit from that. Thank you very much, Cory. I truly enjoyed this conversation.
No problem. That was a pleasure.